Large cap funds, mid cap funds and small cap funds. Which category should you choose to invest and on what basis should you choose a category? If you choose to invest in all three, which combination is the best? Come, let's find out through a detailed analysis in this video. What is large cap funds? On basis of market capitalization, they choose to invest predominantly in the top 100 companies. These companies are large size companies and they would already have been grown up companies. This is called large cap funds. Since they are already grown up, they possess more market share and it will be more stable. Their product or brand is already more popular in the market. So they are able to generate decent returns. The scope for further development in the future might be on the lower side. Why I am saying this is because a student already scoring 90% in the examination cannot go beyond the improvement of 10%. That is why I say that their development in the future might be on the lower side. Large cap funds are less volatile and more stable compared to mid cap and small cap funds. So what are mid cap funds? The next 150 companies that comes after large cap companies on the basis of market capitalization. The position from 101 to 250th after large cap companies. The funds that choose to invest in these 150 companies are called mid cap funds. As the investments are in medium sized companies, it is much less stable than large cap companies and it will be more volatile than large cap. These are also potentially developing companies. We can also use the analogy that we used earlier here. Let's imagine that mid cap funds are a student scoring 60% marks. If he or she is able to put little more effort, they can score 75%. So there is a 15% growth. We can say that the growth is slightly on the higher side when compared to large cap funds. The reason being that the base is smaller here when compared to large cap funds. In large cap you will be able to generate conservative and decent returns, but here you will be able to receive slightly better returns. And the risk is also on the higher side. So what are small cap funds? On the basis of market capitalization, the companies from 250th position to 500th position, the 250 companies between these positions are known as small cap companies. And the funds that choose to invest in these are called small cap funds. So out of 500 companies, the top 100 are large cap companies and the next 150 companies are mid cap companies and the balance 250 companies are small cap companies. So these are small size companies and are unstable. The nature of these stocks are extremely volatile. Even a small negative news will make the value of these stocks go down tremendously. The sustainability and the survival of these small cap companies are questionable. As there is a chance of more failure in small cap funds, we should also understand that the base is much smaller. Small cap funds is a student getting 40% marks. With huge effort, it can score 80%. So there is a 100% improvement and growth. The possibility of this in mid cap and large cap is very small. Small cap has the possibility of more multi-baggers. But at the same time, there are also more chances of failure in small cap funds. So when we compare small cap funds with large cap and mid cap, they have higher volatility, but at the same time they also have higher return potential. So far you would have got an idea about the risk quotient and stability of large cap, mid cap and small cap funds. So on what basis should you invest in small cap, mid cap and large cap? The first criteria is risk appetite. Are you willing to take risk? The second criteria is, do you have the tolerance to handle risk? During a market fall, mid cap and small cap will go down drastically. Even large cap funds would fall down, but when compared to it, mid cap and small cap will go down even more. So do you have the ability to bear this additional fall? Or will you come out of it in fear? You should do a self-analysis. If you think you can withstand this and you are used to market cycle, then you don't have a problem. You can invest a small portion in large cap and invest predominantly in mid cap and small cap. The third criteria that you should look is how much time frame you have. If you have a time frame of 5 to 7 years, then you can invest more in large cap funds. Suppose if you have a time frame of 7 to 10 years, then you can look to invest more in mid cap and small cap funds. If you say that you have more time than 10 years, then you should invest in small cap. Another important point is that if you are purely investing only in large cap or mid cap or small cap, then you might become either a conservative or an aggressive investor. Instead, if you invest in all three, large, mid and small, then you will become a moderate investor. Suppose if you are investing all your funds in small cap and small cap did not perform well for 5 years, then you will not have the enough conviction to continue your investments. But imagine that you split your funds and invest in large, mid and small cap. Large cap would have recovered within 3 years, mid cap would have recovered within 4 years and small cap within 5 years. The psychology behind this is, when large cap fund recovers, you will get the confidence that mid cap and small cap will also recover. On the other hand, if you completely invested all your funds in small cap, it is very questionable that you will have the patience to wait till 5 years when it recovers. During situations like these, many investors sell their investments for half price by booking a loss. So to avoid this situation, I emphasize you to invest in all three, large, mid and small cap in a combination. You should determine your risk appetite before choosing a combination to invest. But there are also more questions like where you should invest more, in large cap, mid cap or small cap. To know all this, you should get the appointment of a professional financial planner or a mutual fund distributor. They will be able to analyze your individual risk profile with the fund's risk profile. By comparing these two, they will be able to say this is the right fund for you or not. After analyzing all these factors, they will be able to create a suitable individual portfolio for you. So between large, mid and small cap, where you will invest more? Please mention it in the comment section and I will meet you with another interesting video. Thank you. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free and you can find the link in the below description. Please like and share and do subscribe to Holistic Investment.